Good morning and welcome back to another pipeline trading video. This week's going to be a volatile, busy week. We have US inflation data, the CPI on Tuesday coming out, PPI on Wednesday. We have other key economic data. Like Monday today is going to be existing home sales. We have retail sales on Thursday. What else is there going on? We have the summit, and I believe that's May 14th, 14th to 15th in Beijing. And then we have earnings seasons, which, if anybody's been paying attention to the market's been absolutely crazy. And we have the new Fed coming in, we have speakers, and then we have a lot of other things going on with the geopolitical tension still there. Nothing's changed. And the markets are still ripping. So let's get into it. First of all, I'm going to start by saying I did not expect for us to continue this rip, I'm very cautious. It could keep going up. This is the year that we could see this blow off top, but we've gained 17.5%. Okay, from nothing. This is all a downturn from the straight. The strait's still closed. Bombs are still going off. War's still on, and we're ripping up 17.5%. So make sense of that one. We have the semiconductors that are absolutely rocketing. And to me, this is like screaming that there's an issue. I know we're going to have an AI boom, and maybe my timing of it is wrong. I've never seen this extend to 125% from the 200-day moving average. It hasn't done that once. We had 86, 94. Like, this is really getting crazy with where we're going. Buffett's sitting on the most cash he's ever sat on. So that's a red flag for the markets. Oil, it's still holding up because of what's going on. But this chart, unless we, like right here, we should have made a new high if we were going to get that. So I'm expecting oil to continue to the downside, just because there's two ways this could play out. This could have been an A, B, C, and then we can have an A, B, C, or this is A, B, and then a C up, which I don't see, because it does look like things will eventually, if anything, the market's pricing in good news over there in the Middle East. So this could be a B. Right now we're in a B, and then a C to the downside. So that's pretty much what I'm expecting. We haven't made a new high, so I'm expecting to see a lower low, just like we had a lower high right here on the right shoulder. We should have, if we're going to go to the upside and we held the 50-day and we broke above the 10 and the 20, we broke below. This is showing me that we're dying off. And, things are weakening when it comes to price action in the oil sector. So I'm expecting more downside unless something crazy happens. Absolutely. Everything I'm thinking right now can be void and we just go up. Gold to me looks like we're going to be going up. I have a number of about a measured move of around 5,600. But before that, it will go to this fair value of 52.77. Unless we get rejected, we come back in here, and then we could see anywhere from this area down here close to the 4,000. But we did hold that 200-day moving average. So maybe we go to 43, hold the 200, and then go. But right now, this is looking, it's holding the key fib levels, which is what you want to see because this is an impulsive move. And we could have had the A, B, C. Now we're going A, B, which was 44.93, and then C to the upside. And we broke out of this wedge. So a wedge like this, once we break out and we hold it, which we're holding right now, is very bullish. And if gold rips, typically that means it's a flight to safety, something else is going on. And before I go into Bitcoin and BM&R and Intel and Tesla, if we look at the 10-year, to me, the 10-year looks like it's going to go up. And we could get, again, almost 5%. And if that happens, expect the market to have a really big drawdown. So this is something to keep your eye on, because when this rips up, and there's a lot of gaps. Like, we might not even get there, but we might go to the 47. Um, yeah, I mean, this could go either way. But right now, if I look at the weekly, short term, we might not get above it. But when I look at the weekly, I don't know. We're going to see what the inflation numbers look like. But this is something to be very, very cautious about, because if this rips up into the 5% area, expect the market to pull back and pull back pretty aggressively. Google's still ripping. I'm not seeing anything here. They just did, bond sales to, for their AI expansion. But everything here still looks bullish, but we're in a greed area. And that's something to be very cautious of. This isn't an area where you'd want to buy. You want to buy when you get these pullbacks on companies like this. But then again, who am I to say how high this can go? Because right now it looks like 2026. If you remember, there was a chart I showed months ago and talked about periods when to make money. And 2026 on this chart, this is a chart that's over 100 years old, and it's a time to sell in, when prices are high. And it said that 2026 is going to be a market that has high prices, and we're seeing it. But again, I think it's selective, because we're not seeing that across the board. We're seeing it mostly with the AI companies. And if we go to Meta, Meta's looking like it might hold up on this fib level of the 605. But right now, I would just be watching this, because this is still very bearish. The price is below the 50, the 10 crossed to 20, and we could continue to go down to this liquidity down here or hold this line. But if we were to break out of this and hold it as support, that would be bullish to maybe go back to this first fair value. No, this order block is 757, not fair value gap. Oh, there's a fair value gap here too, around this same zone. But this right here, descending, typically when you break out, you're going to see it go to the upside. Could we go to the 800s? Absolutely. If you look at what everybody else is doing, I don't see Meta not being a player in this. And we're going to see, because right now they're spending a lot of money. And any piece of news that comes out in their favor, I think that you could see a good run up. And if we go to Tesla, Tesla's almost at the target zone that I mentioned with this. So you can see this is a perfect example of what I was talking about when you have a descending wedge. Oh, descending wedge. We broke above, went back below, broke above, and then we held the line as support. And on top of that, we had confluence, because we were holding the key Fibonacci levels, which is what you want to see. So I have a measured move where I would be looking to start taking some profit at 438 to 446, and keep a close eye on it on the lower time frames, because we could absolutely get a push right up into the 480 range. Who knows, right? In this market, the way things are running, I'm going to have to talk about Intel, because I'm getting smashed on that short right now. And Intel is absolutely, I don't even know a word for it, because rocketing's an understatement. This thing is just gone. And it's an extreme greed, but the volume's holding up. The volume is going. We could see 140, 150. My thesis is still short, though, because one of the things that I'm looking at And I made this in the last video. I said I was short at 110 just off of some very logical numbers. I don't see how they're going to price this in. They haven't had a full recovery yet. There's still a lot of work that has to be done, a lot of spending. And you look at what they made, you know, their earnings. Yeah, okay, that's a great number. 1428 percentage surprise, right? They reported 0.29. Keep that in mind. 0.29 in earnings right here. When the market was pricing them in at 75, there's two things I should say actually. I shouldn't go that far back. I'll go to 21 because 21 we had a lot of stuff also. And when you go back there, they had 152. So I was talking about this in the last video. They're reporting more revenue than they are today. And at the same time, this is kind of mimicking the dot-com bubble. And maybe I'm wrong by saying bubble because we are in a new world where it's AI and tech and data centers and all this stuff. You're going to need more of the chips and memory and CPU and all that stuff. I get that. I just think this is pricing it in way ahead of them actually doing anything yet. So as you can see, this is a cup and handle. We broke above it, and I was actually expecting a pullback at 110. I didn't think it was just going to just keep going the way it is. So I'm still holding the short. I might have to add into it because this is showing that we could go to 140. And in this market, who's to say it won't go to 150 and up? I don't know. That's why you got to be careful when you short these. I'm just shorting based off of the price. But my indicators and my actual, and this is where you have to have a trading plan. And that's why I say this is educational. Don't copy what I'm doing because sometimes I do stupid things like I did last week and I shorted this way too early. I had no confirmation of the short, but I just went solely off of the price. And that's something you don't want to do because then you're in a position like mine where you're down. And I'm down a good chunk. So right now, this is where your balls have to come out. I got to hold the short. I have time on my options, and I have to see how I'm going to fix this or just take the loss. Those are the two options I have. If there's anything that I get in my favor, a big drawdown, because just to give you an example, what I'm waiting for, this can't just keep running forever, too. It has to die off, and then we get some sort of big pullback. But if look at right here, that was a 22% drawdown, right? What I need from here for us to go to the 96 level, the 0.382 fib level, which is not a big thing, that's only a 24% drawdown. Intel's up well over 150%. So to see a drawdown like that isn't a big deal. And it's also even if we got something smaller, right to the 10-day, even the 10-day moving average, that's a 20% difference. So I am expecting some sort of pullback. We do have this gap here, and gaps do get filled. And that's really what I should have waited for, was for this market to pull back, try and make a new high, fail the new high, then put the short. And I didn't do that because I saw this thing ripping the way it has been and not slowing down and just go, 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 go. And what's going on in the overall market. The overall market, I think, is due for a pullback. I've been waiting for that for quite some time. And I think the market, like even if the news comes out that the war is done, they open the strait, I think the market's already pricing that in. So that's another thing to watch out for. And now I'm going to go into Bitcoin. So this is where things, Bitcoin and ETH, are at a pivotal point. So if you remember, I was saying for us to invalidate this bear pullback or this bear market, whatever you want to call it, there's so many names for it, we would have to get above this 97,000 level. If we pierced above here, this whole thing's invalidated because I would expect a run up to here, pull back to support of around 85, and then I would say we are on the cusp of a bull market going back to all-time new highs. What's very fascinating about this is we haven't broken above the 200-day. We went exactly where I thought we would. Depending upon, is this bear flag going to be more shallow or deep? Meaning, is it going to happen sooner, or are we going to continue to go up and up and up and stay in the channel and get to these levels, fake everybody out, and then go to the downside? Because typically with a candle that we had right here, this is a bullish candle. I know you can't see it because of the Gaussian channel, but it was green. And we've stayed in it. So if I just draw this out, I'm just doing it really fast for you. Right here. So you could see we stayed in this channel. Then we broke above it and we knew that it was going to go up, right? That's bullish. You would want to see it break to the downside for it to continue to go down. Now, here's the thing. The amount of leverage that's on the long side is huge. So that's one cautionary thing to be mindful of. This is a measured move. I'm expecting it to go down, which is about 55. And then if it capitulates and we get the measured move of the actual head and shoulder that started this whole thing, that's taking us down to 49, call it 53. The reason that's a big level is because of this right here, right? This was where we broke above and held the support. So you could see this was the ceiling. It broke above it and it held this as support and then it went. But it was resistance at first. And if you look at where we were, I want to be very clear here. This could be the bottom because of this being the floor. This was the last high of the other market. So this area is huge where we are. I just don't see that yet. Until we get out of this bear flag, I'm not convinced. Now, can we shoot up here to 87? Absolutely. But if you look at where we hit the level and got rejected, now got back above it to where we broke structure. This is a change of character. This leg down was the neckline of the head and shoulder that brought us all the way down here. And that's why I was saying we can easily get to 80 to 84,000. And the reason I was saying 84,000 is typically there's a few things I'll discuss on this one. One, the 80 level is where the neckline broke. Two, this is a distribution level. So you could actually see this go to the middle of distribution, which would be 92,000. But if we were to do that and get above the 200-day and hold the 200-day as support, and all the moving averages get above the 200-day, that is a game changer in my view. But right now, you can see we're continuing to get rejected in this bear flag, and there's a lot of fair value gaps. There's a lot of order blocks on the long side. Typically, these would get smashed down, and liquidity would get grabbed, right? So even if we were to go up, I think we would come down first. But I would be lying if I said that this isn't bullish. We held the 50-day. This is a big candle. It did the same thing that it did over here. We're holding this. It's going. Could we break it? Yeah. For us to invalidate everything that I'm saying, we need to get above this level right here. We need to get above and then go. ETH, this is lagging a bit because ETH still has some room to go to the upside. And it's funny. Look at where this is going, right? If you looked at the Bitcoin played out, hit the 200-day and the fair value, and it's still in the bear flag. ETH has not done that yet. And ETH right now is continuing to hover at the 20-day moving average. If we break the 200-day moving average and we break the 50, I think ETH could be the first to go. But based off of the Bitcoin chart, I still expect ETH to hit at least close to 2,600. Because that would actually bring us, I'm going to draw this in for you, where we broke the key level to go test would be this yellow line right here. And that's 2627. So that's really where ETH should go this week, next week, whatever week, before we go to the downside. And the other thing that's interesting about this is the entire market has ripped and it made new highs, while Bitcoin and ETH and most of the crypto market hasn't done. I shouldn't say they haven't done a significant move, because we did still get, what is this? Yeah, I mean, on ETH, you got a 41% move. And I believe we're probably close to the same thing with Bitcoin. No, a little less, 38. So maybe that's why ETH is dying off here, because it has a bigger pull, right? It had a bigger run. But until we get through this this book right here, because this is an order block, which is bearish, we need to get through this. We'll hit the 200-day moving average, but be very careful, because we're still in a bear flag. Okay, so I hope this helped. This is what's going on. Other than me getting killed on Intel, my thesis has pretty much still been the same. There are some great plays. It's just be very careful. The market's it's into the greed zone. We have a lot of geopolitical things happening. We have key economic data coming out. We have today home sales. Thursday, we have retail sales. Friday, we have industrial production and capacity utilization. And what's that? The Empire State Manufacturing Survey. We have Trump meeting in Beijing on the 14th to 15th. We have earnings season ongoing. So it's going to be moderately busy week, I guess you could say. Fed speakers and policy backdrop, that's all this week. And we have the CPI on Tuesday and PPI on Wednesday. So if any of this data comes out negatively, I think the market could take a massive drawdown, because right now the market's pricing in all this stuff. But this is typically what happens on a blow off top. So not to say that you can't make money. The trend's your friend, stick with it, but be very careful and cautious, because things at these levels, when they reverse, they do tend to drop pretty heavy, and you don't want to be holding that bag. So if you found this video helpful and you want more content like this, please subscribe, hit the bell notification, comment below, let me know what you're seeing. Do you agree, disagree? I'm always open to different theses. And I'm always willing to change my argument if I have too many holes in it, and that's fine. That's what we're here for. As always, stay disciplined, trade with intention, and God bless you all. Have a great day.